Going into the rest of this year, smaller exporters account for almost 40% of all total U.S. exported goods, and certain sectors are already seeing slower revenue growth. Joining us now with the breakdown is Brian Hamilton, chairman and co-founder of Sageworks. They do amazing work on the private sector, and Brian, we appreciate it because the public sector, they put out reports, we know. You dig into the private sector, which is very, sort of mysterious. What are you finding out of your surveys and your analysis?
Yeah, you're right, Brian. The revenue growth of privately held manufacturing firms and wholesalers is going down a bit. But remember, it's still healthy, so all is good on the Western Front. Things are going well. And remember, only 0.1% of 26 million companies in the U.S. which are privately held do exporting. So I don't think it's fuzz on the screen. I don't think it's a huge deal.
That's interesting, too, because we always say, well, U.S. companies, especially the big public ones, are going to be crushed because of the U.S. dollar strength. What you're saying is, maybe not public, but the private companies, 99% of them are probably going to not be impacted at all.
Yeah, true. But let's dive into the details. If you look at manufacturers and wholesalers, which, as you know, do a lot of exporting, about 30% of our export dollars are from those companies, as you pointed out. Those guys have pain. But, I don't know if I'm going to get this right. Causality is not correlation or whatever that expression is. But the point is the U.S. dollar being strong doesn't necessarily cause the lower revenue growth, but it's not good for those specific companies.
All right, so how big of an impact then would you say lower natural gas is, grease, the dollar? In other words,
right.
Our viewers and listeners that maybe own a small company, a 40, 50, 100-person concern, and they've got all these things that they're reading the headlines or watching on CNBC, do any of them really necessarily matter?
Yeah, well, I need more IQ points for that one, but let me give it a try. All of those factors, as you know, they all are important, but they tend to counterbalance each other, right? So my view is a strong U.S. dollar is generally good. It correlates, Bri, with good GDP growth.
A strong economy.
So the point is, I think, I'm sorry?
A strong economy.
Yeah, exactly. So if the economy is good, Main Street businesses are very happy because it means more revenue, it means more gross margins, it means more net margins. So the dollar being strong, I think it affects probably about 150,000 companies out of 26 million. Those guys may have a little pain, but remember, they're still growing. So, I think it's always a big deal. We have to look at those niche companies, but it's not going to drive tons of effect with these 26 million.
Okay, question, and I'm going to put you on the spot. Good on your feet. Have you done any work at all at Sageworks on how much these lower gas prices are really going to benefit private companies, the overall economy, et cetera?
Yeah, you got me in the morning. I'm used to you in the afternoon, Brian. But not really. We don't. As you know, we collect fundamental data on private companies. But again, let me take a whack at that. I would say that, again, those types of sort of microeconomic issues or whatever affect niche businesses. So on the overall state of U.S. companies, it's good, but we don't collect that type of data, to be honest.
John, the Spine did a great job as always. We'll see you in the afternoon and on the morning again as well. Brian Hamilton of Sageworks. Thanks, buddy. Appreciate it.
Thanks, man.